So welcome to Affinity Insurance Solutions. Here we are the partners under the same umbrella, helping Affinity Mortgage brokers to provide insurance solutions to their clients as well as for their own needs. So let's get to the main event of the day. We will talk about disability insurance today. Let's learn about disability today. What do you think, or what do you consider the most important part of understanding this concept? We must first understand the value of our own activities and what derives the biggest asset. What is the most valuable asset do you guys own? And I hear you, most of the brokers, mortgage brokers specifically, and realtors tell me the house. Most of the time, the clients also tell me it's my house and my investment properties. That's fantastic. Yet we have to understand and respect that most of the time you have borrowed a mortgage on it. So really, that estate or that asset state you have built are still not yours yet. They depend on still a bigger evaluation. So we can have this interaction open and have somebody tell me, what do you think is the biggest asset you own? You can type it on the chat or you can also talk to us. Let's have a quick conversation through this webinar. Any ideas? Health. That's a very good point, sir. But what about your health? Very good point as well. The biggest asset is the family. And I would love to talk to you a little bit more about that value as well. But family is priceless. So we can't really compare that monetarily. We want to talk about things that we can protect monetarily because there is a pure risk versus speculative risk. And we're talking about pure risk that I can help you with. If I'm healthy, I can earn. You hit that mark perfectly. Again, we see everyone has Himanshu, so I apologize. I'm unable to identify different people's answers, but that's correct. It's your ability to earn money. It's your health allowing you to go out and make that living, to make that mortgage sales, to meet clients, to meet realtors for referrals. You need to be active and healthy, not just physically, but mentally as well and emotionally as well. Combiningly, it will give you the ability and the strength to produce the income you have been and improve that income year after year. Your mortgage, your investment loans, all of these come from one simple factor: your history of ability to earn money and the potential you still hold for earning that money for the long time. And that's why we want to talk about how do you protect that asset. And that asset, if you are an earner at least of 100,000 a year and you have more than 30 years towards your retirement, you're talking about more than $3 million of assets. So most of the time, it's much higher than the principal house you have. So we have to respect that our assets, they don't always mean tangible assets. We have to respect that our tangible assets are coming from this main source of income, which is your health allowing you to go out and make a living. Worship. Thank you. So, answer as put out. We're looking at a scenario where your health makes the most difference for you. Is what allows you to earn money. Simple as that. So let me ask you guys, have you guys protected yourself against the biggest asset you have and from a failure situation of that asset? If not, we have to consider getting this situation cleared as soon as possible. because we consider life insurance quite easily and quickly, and we tend to talk more about life insurance. That is understandable. We want to give out something. If we are not able to be there, we want to make sure that the finances are in place for that. But the condition here we are talking about is you're still alive, you're still living, and you are unable to maintain your lifestyle. Sorry about that, guys. So here we look at average expenses on the household, we look at the lifestyle required, and I know most of you are a good producer at Affinity Mortgage Solutions, and you know your assets, your income is quite vital. And one of the challenges as a commission-based individuals is we tend to have that unstable, unaligned incomes different month. And yet we try to budget ourselves, fine tune our expenses so that we maintain that asset outlook and the lifestyle throughout the year. We also have to consider this on a long-term basis, not on a year-to-year or a month-to-month basis. And you have to consider that your health and your income while you're still alive is far more important than just considering that situations. And when we can see from right here, a potential for a person to earn money and the income they hold definitely gives them power of assets. But this is a future income. You have not made it yet, but your mortgages that you calculate for your clients, that you do it for yourself, and you provide the advice on it, comes from one factor, and you always end up doing this for all your clients, is look at their expenses versus their income. So where is that income protected? That income can be protected by disability insurance. Disability insurance, by nickname or a generic name, is known as income replacement plan. Income replacement plan is for people who are still alive. This is also called a living benefit. And we want to focus on this matter the most because the statistics are quite clear. Chance of you getting sick and impacting your income are much higher than the chance of death within a short period of time. Again, life happens on both situations, but still the risk is different. And that's why I tend to do a small exercise with most of my clients. And I also teach some of our advisors that have talked to me personally. Let me ask you this basic question. Let's say I give you 2 tickets, a lotto ticket. And one lotto ticket is $5 worth. Benefit amount is still $1 million. The chance of winning is 1 in 5. The other lotto ticket is only $1. The chance of winning is 1 in 1,000. But the price is $1. The reward is $1 million. So both has the same rewards, both has the same potential of outcome. Yet, we consider the potential of winning. Ticket 1 is a 1 in 5 chances. Ticket 2, it is cheaper, but has a 1 in 1,000 chances of winning. Which ticket would you consider to buy first, and why? I would love to hear some answers and responses here as well, please. Anyone who wants to take a guess or try? Who wants to go for a ticket 1? Anybody wants to spend $5 or wants to spend $1? Which ticket do you guys want to go with? All right. Looks like everybody's a little bit occupied. So generally, I get an answer that $1 ticket's cheaper. Yes, but when we start to ask a logical question of chance of winning 1 in 5 versus 1 in 1,000, people tend to reevaluate their decision based on a $5 ticket. This scenario or this explanation here, or a little bit of a practice on thinking, is about the idea that the lottery one, ticket number 1, is talking about disability in Canada. And lottery number 2 is talking about a basic term life insurance. Yet, the major focus tends to be on life insurance more than protecting your biggest asset. I want you to consider this very carefully, that we are not just talking about getting a disability insurance because it's the sake of getting an income protection. We're also considering that the best value for your dollar right now lies in you getting yourself protected with your income first, more than your life insurance. You must consider disability insurance as your priority, because that is the base of financial planning. Everything you build and will build is all coming from this source of income. So protect that accordingly. The chances of getting disabled in a lifetime in Canada is extremely high. It's actually 1 in 3, not even 1 in 5. So we have to look at the challenges in health conditions, and COVID has proven that life in health circumstances can change rapidly. Nobody predicted it, yet it happened. And a lot of clients took benefit during the COVID time when they faced COVID, and they were able to maintain their lifestyle and the expenses, versus clients who struggled and suffered and failed during this struggling time. We saw both ends of the spectrum. I want you to consider that disability insurance is not just critical illness. And a lot of the time it is considered and compared to a critical illness because it is also a living benefit. But critical illness is a survival policy, whereas this is about protecting your lifestyle and managing your expenses so that you still can focus more on recovery than focusing on how to make that mortgage payment or the rent payment or those car expenses and insurance costs and children growing up and expenses for the children, the daily living expenses. All of those things matter. So we have to consider that these health conditions are quite vital. Family. I know one of you answered very heartfully that their family is the biggest asset they own. And it's a loving thought. But have you considered on that same family the effect of you getting sick, the impact that it will cause them? And it's not just your family, it's also your friends and your colleagues and your teammates, everybody that's associated in your life and around you, depending on you, you depending on them. Everybody gets impacted when you are not able to perform your duties. We forget that a lot of our activities are done on our own, and we don't necessarily pay ourselves to do those things. And when a disability strikes, when that illness strikes, we depend on family and friends to come help us. We consider this cost quite large and rapidly growing when such disability occurs. And disabilities can have many phases. We can have short-term disability, partial disabilities, long-term disability, and total disabilities. So we have to look at different scenarios and expansion. But let's look at the drastic ones when they are major disabilities, they are total disabilities, situation that arises in life. Have you protected yourself? Because by protecting yourself, more than protecting you, you're protecting your family. You're protecting them against these unfortunate circumstances because their expectations lies with your. So please consider how you look at disability. It is not just about buying a policy and protecting income. It has ripple effects on your family immediately. And you are the one seeing it, experiencing it, and you will experience it on a daily basis unless and until you have found solutions in advance so that these circumstances does not become troublesome, eventful. Disability coping becomes a large expense. If you have both husband and wife, both family members going out and making an earning, we take things for granted. But when such disability strikes, when that health condition situation arises, we tend to forget that we will need help. And during that help, either will depend on that second earning spouse. And if they come and help us, are they going to be able to focus on their work? Likely not. And if you allow them to go focus in their work, are you able to get the service you deserve for a better recovery? For that, maybe you will purchase a support from a nurse. But the average salary of a nurse and an in-house nurse is not just a basic salary. It requires quite equivalent cost of expense as much as you would be earning for yourself. So we tend to forget that our income is double our potential. We just don't tend to pay ourselves for regular activities. We have to consider that disability insurance can help you in this most unfortunate circumstances while you're still active, still trying to be good, contributing members of the family and trying to recover as soon as possible. So disability is the plan that can get you a helping hand when you need it. So instead of putting it aside as the last priority, please make it your top priority. So how does disability work? Disability insurance, of course, you need to buy while you're healthy. Buying it once you're unhealthy is unlikely going to happen. Insurers are going to decline the coverage and potentially rate you. But if you are healthy, naturally insurance works. When you're younger and healthier, you buy this insurance, you protect your health, you lock in your good health, and you continue to save on premium as well. And you, as your income grows, you can adjust disability policy accordingly. But at least to start out, you have locked in your health. The insurer has got a full underwriting situation on your health, and we can consider that as a good assets to have. You pay your regular monthly premiums, and at time of the claim, at the time of the disability, the insurer will pay a monthly benefit. Critical illness is another living benefit, will pay you a lump sum benefit, but it's limited to critical illnesses. Whereas disability can be from various illnesses or injury. It is not limited to critical situations only. We have more options of claim. So make your regular payments. If you have a waiting period, and if you have chosen a waiting period because you feel that I can save a little bit of premium and protect myself for a couple months, then well and good. You are taking the larger risk to the insurance and shorter term risk by being self-insured, which is also good planning to have. And the benefit, once you recover, can stop coming. Yet your policy will continue. In case there is a second event or a completely new event, you can make another claim. So disability is not about a policy that you make a claim once and the policy is done. The policy still continues to protect you and still continues to give you the ability to stand back with confidence saying, I have protected my income. I will be more secure if such situations happen. My family will be protected. My lifestyle will still remain strong. That is where we talk about. One more key factor about disability insurance, and like I said, we also talk about here is about your physical health, your mental health, and your emotional health. Disabilities with different companies does give you an option to do that. And then as mortgage broker, I truly understand that we deal with mental pressure on a daily basis, with closed deadlines on approvals on the mortgage, with extremely last minute circumstances and pressure from the clients and the supporting realtors. We constantly get bombarded on this pressure driven market where we get burned out and stressed, and these impact our health. So we want to make sure that you consider that when you purchase or get the coverage for disability, because mental health is equivalently important. So consider that as part of your evaluation. Financial security is, of course, peace of mind. And I have heard an argument in the past with one of the mortgage brokers that the clients can sell their property during these tough times. Do you really wish to sell your living conditions to support a health issue? And do you think if you have done that and you moved out to a second property in a rental, it still doesn't cost you? The impact of that decision is more drastic than taking the step to buying a simple disability insurance protection for yourself. The repercussions of making a decision that I have access on the equity of the house is not a very good financial decision. We need to expand and protect our built assets, not liquidate them at any moment of crisis. So consider that as part of your understanding, and consider mental health also, which will provide you that security and peace of mind. The key concepts here that I want you to definitely ask regarding insurance and the protection you have got or are considering to review or would like to talk to us for a new opportunity of getting covered, please consider these combinations. You could have total disability, which can be a short term or a long term. You could also have a partial disability, which could be permanent in your life or could be for the short term. All these combinations will impact you differently. The biggest ones are either partial disability or total disability for the long term will impact you the most. Second, if you are total disabled for a short time, and short time I don't mean by a month or two, I really mean a year or 2 or 5 years at short time, and long time here we mean rest of your life up till age 65 or beyond. We have to look at this both scenarios and the risk that lies. And then we have that partial short term where we can potentially make an adjustment or try to plan our life around it. But if we can get that protection combined and make sure all 4 tick marks are there, then we are good to go. So please ask that to every advisor you talk to, that do you have the right protection? What is considered? We talked about it a little bit. Your age is considered, your health is considered, what you do as your income production, which is your occupation, matters the most. Of course, the amount of coverage you wish to have, you want to protect 100% of your income, or you want to at least protect the mortgage or certain liabilities so that you know that at least those liabilities are always taken care of. We can consider the waiting period based on if you have a budget of self-insured or you want to give 100% coverage against from day 0 or have 30 days, 90 days, or even 120 days waiting period. Benefit period can also determine your claims or cost of insurance. Benefit period in disability means quite different than a standard term life or critical illness. It's not the life of the policy, it's how long a certain disability's payment will continue. So if you have a coverage where you have bought a disability policy for age 65 or term to age 65, and you have chosen a benefit period of 2 years, then if you have a disability, the maximum benefit they will pay you is for 2 years, but your policy will still last till age 65, except they will pay for a new disability, not for the same, because you have taken only 2 years of benefit period. Or you can choose to have a benefit period till age 65. You can also choose to have a term policy of 20 years disability and take a benefit period till age 65. So if you hit disability and total disability for a long term, then you can still have, the policy could have expired, but your benefit period will continue till age 65. So I want you to understand the benefit period a little bit differently here. It's not similar or even considerably similar to term life or critical illness policy. So don't associate them as the same. Furthermore, please look at your expenses budget and see what my gaps are. What are my essential part of disability protection, income replacement that I need, and what I can be without. It would be lovely to have 100% protection, but we also know that you want to maximize your budget, you want to maximize your investment options, you want to create equities elsewhere. So I totally understand, we totally understand that you want to maximize your budget and not just spend money on premiums. So we have to consider and sit down and do a proper financial plan for you. We'll move through these couple slides quickly. The protection limits are different based on different income options on a monthly basis. Consider this as a self-employed, there are multiple options that you have. The current plan that is shown here is subject to your benefit amount being tax-free. So the amount you're seeing, a monthly benefit of the 2,200, if you make an annual income of around 35,000, that 2,200 benefit paid out by the insurance company will be tax-free. So there is no more income tax to be paid based on the benefit you will be getting. Fair enough? Please know this because it will be important in part of your planning as a self-employed, because you have a choice either to pay the premiums to a corporation of your own. But if you're doing that, you're getting a deduction on taxes now on the premium payments, but the benefit will be taxed as income. Whereas you can buy this policy outside on a personal basis, whereas your premiums are not tax deductible, but your benefit will be tax-free. And this again depends on your personal financial planning and your personal portfolio and how we can maximize your budget rather than just looking at the two solutions. So there is the solutions that I offered, the two options, they depend on where and how you plan to see your financial around the future circumstances. So please have a talk with a professional advisor and make a call accordingly. Don't just say, I'm getting a deduction, so great, I'll get out of my corporation's income and I can get a potential benefit. No, you cannot get a tax-free benefit if you are getting a deduction on your corporation. So plan accordingly, please. So plan for health emergencies. We talked about this. Most people will sell, I have my own cash, I have some assets, or I'll liquidate my investments, I will liquidate my property. All of that seems to be reasonable up to a certain point. At the end of the day, you have built off this for something, for a purpose in the future. It's not just frivolous, it's not just to say that I have more funds, you have plans for it. That's why you're making and taking these actions to produce more returns, because you have a plan for it. You have a plan for it for your family. You have a plan for it for your children and grandchildren. Whatever it might be, you have to consider that when you take something out from there, you are going to have that long-term loss without having a replacement plan. So you can buy a disability policy, make sure that your assets tend to be with you for the long term. Employers definitely has, some of you might be part-times working with your employers as well as doing mortgage. Some of you are full-time mortgage brokers. So both options exist differently and the planning requires a different consideration. If you're an employee, we can help you top up that additional income with a different plan from being a mortgage broker versus being an employee. And if you're 100% mortgage brokers, we have options for you as well, where we can plan according to your needs and requirements and meeting how your income sources are spent. It matters quite drastically, and the options exist on both ends. We have options in the market now where you can get up to 100% return of premium on disability insurance with certain insurer. It's not with everybody, but it's available now in the market. So we can consider if this is a part of your financial planning. The return of premium options exist in varied forms. Certain companies can give you return of premium every 8 years, 10 years, or those that will give you at the end of the term or till age 65, where they will return the 100% of premiums if no claims have been made. So you can still protect your health and get your money back, which is a fantastic idea. We also have to consider there's a cost associated with return of premium options. We have to compare that cost versus what you can do with your own assets. And if you have not maximized your government shelters of registered funds like TFS and RRSPs, then maybe we can consider those options first, maximize those options, and then look at these options and see. Because normally with most insurance company, the disability insurance return of premium do not include return of investment on it. So please consider these options and talk to us as soon as possible, and so we can help you maximize your decision. We have a fantastic deal to offer you today as well. RBC right now, RBC Insurance is offering financial professionals such as you 20% discount, a 20% discount that will last you till age 65. So take this opportunity, talk to one of my advisors at Affinity Insurance Solution, or talk to me and see how we can help you, because this discount is going to be very beneficial if you can take an advantage of it in a timely manner. It's not a small win. It's for a short term. It's till end of June, but please consider that discount is quite drastic. And if you consider 20% discount, paying till age 65, easily more than 20 years or 30 years of premium payments, that's thousands of dollars of discount, not a couple of $100. So consider this. We have very good plan going on right now with RBC Insurance, and take the time to get to know us and we'll help you. Is it only till age 65? Very good question, sir. Most companies' disability coverage is up to age 65 or till retirement. There are options to expand that if you continue to work up till age 71 or 75 with certain insurers, but the coverage is then limited. It cannot be the full potential of income, and the definitions of the disability changes. So these options do exist, but the idea here of disability insurance is always about up to your retirement. So we do see a potential in the coming future where we might be seeing policies for the young generation till age 65. Till age 67. I apologize, I'm correcting myself. For the young generation, because the new retirement age for the new generation, people at my age group, around 30s, 35s and before or younger, sorry, will see this change from 65 to 67 in the next couple of years. But for a general population as of now, retirement age is considered at 65. So we consider that as primary limit on disability insurance. Exceptions do exist, but usually we try to see if you are getting retired, then maximize those income from other sources, like your RRSPs turning into RIF. At the end of the day, financial planning comes down to one thing as the primary balancing act. You guys love to talk to your clients about investments and properties and giving them equity access, which is all well and good, but you have to let yourself and your clients know that they need to protect their income, because none of these planning will work, and rather they will fail like a domino effect if they cannot protect their income. Protect the biggest asset you've got, beyond the family being priceless. Protect the income that is tangibly produced every year by you. It's quite important in the most important part of financial planning. Financial plans usually are derived in this pyramid way and showcased that way. I prefer not to, because financial planning is about a balancing act. It's about making decisions on the best interest on both sides and not just taking a decision that I have to do this first and next. No, first, take the balancing act and protect that income. We'll open questions now. If anybody has any questions or things, please ask away and I'll be happy to help. And if you have more in-depth questions, meet us in person, call us over an appointment and we will help you. We have a team of advisors. Most of my advisors work with your mortgage brokerage as well, so they're part of your team as well. So talk to one of us and we will be happy to help you out. Does health play a big part on premium? Extremely big part. Your health is what we are protecting against. So if your health is not in a good condition now, you will be impacted on your premiums. But if your health is fantastic and we can take that advantage of taking that good health now and protect that for the future, then you can be on the winning side. But health takes a big part of insurance planning. It takes a big part of financial planning. And it's not just your health, you have to consider your family's health, because this ripple effects matters to your family as well. Any more questions or concerns? Please reach out. We'll keep this open for another 10 minutes. I know you guys have a busy day ahead, and so do we. So let's make it quick and short. Anyone has any further questions or concerns? We can open the mic too. So if you are not able to type, please, you can open your mics and talk to us.
Gautam, it's a fantastic presentation you have provided.
Thank you, Winsor.
Well informed, well versatile. To tell you the fact that I don't have a disability insurance, so I'll be a first customer from Affinity to get a disability insurance for sure. I'm going to reach out to you today. It has opened my eyes too. You know, I mean, like we always think, oh, we are healthy, we are fine. You know, we won't run into problems, but hey, you never know. We can run into problems anytime. So this is a good opening. I'm sure that with the special that you have with the RBC with the 20% down, which is a good firm as well, I think I will strongly advise all to take advantage of it. I mean, like it doesn't hurt for you guys to give a call to Gautam just to find out, you know, what the premiums are, how it works out and all these stuff. And I think Gautam, I think you also can customize according to what their income is, you know, for example, like, you know, whatever the premiums they can afford it. I'm sure that you can work around few things, right? Hopefully that can be done, right? But all it takes is just a phone call to Gautam to, you know, find out your conditions on the premiums. So I'll strongly encourage everyone to give him a call. Gautam, can you also send this presentation to Ria so that she can share with the rest of the group who didn't turn up today, right? And we will try to encourage every single person at our brokerage to reach out to you to make sure that they secure themselves, not for themselves, just for their family. The family is the most important thing, because if you go in disability, especially when you are self-employed, the family is going to be suffering without the protection. So we will call this as a good health protection, and we'll take it from there.
Thank you, Windsor. Thank you for the kind words. And we will have this recording available to you guys, and we will provide the link so your teammates can watch it. The video will be uploaded on our Facebook page as well as YouTube and Google, so people can still see from different methods and sources. If anybody has any questions, please reach out and we are here to help you. And Affinity Insurance Solution is your partner, so please take the advantage. We are here to work together. So even if your clients have concerns regarding disability insurance, or you want to provide a better understanding, then have them call us and we will be happy to provide you a feedback from your client as well.
Gautam, before you go,
Thank you guys.
quick question. If any of them want to pay the premiums from their business account, can that be written off against the expenses?
So again, fantastic question. We did approach that a little bit. You can do that, but then you have to consider that the benefit amount that will be paid out will be added to your income for the year that you are getting the benefit.
Okay, let me retract this back. So let's say if I have to pay $1,000 premium per month, right? And
that's quite high. You don't need to do that much for a disability insurance.
I'm just saying, I'm just throwing out a figure. So basically, if I have to write off that from my taxes end of the year, I will be able to do it. But only thing is, you're saying I will have to pay taxes at the time if I claim it back. I mean, like if I go on disability, if the premiums are paid to me, then at that time I'll be paying taxes, right?
Correct. So the benefit with if the disability occurs and the insurer is paying you the benefit,
right,
then you will be taxed.
Okay, great.
That's a good your regular income. Whatever income you are getting now, you'll be paying income tax bracket on it. That will impact. But it will also show that you can get more disability insurance coverage than the chart we showed, that if you're doing like 35,000 maximum, you can get is only 2,200. Whereas if you're doing that, your benefit amount would be a little bit larger.
Right.
Be considering that you have to pay taxes out of it.
Okay.
Both situations exist, but we have to let you guys know that the decision has two different repercussions.
Right.
So we make the call accordingly. And if you have return of premium options, and we have some executive plans as well, that if you are paying, if the corporation is paying 50% and the employee is paying the other half, then the benefit can still be tax-free.
Okay.
And the return of premium goes to the employee or you yourself, if you are self-employed, as our benefit or not benefit. 100% return of premium comes to the employee, which yourself, outside the corporation as personal asset on retirement. So essentially, you can still use this option to do a proper financial planning within a corporation as well, and maximize the output from the corporation while minimizing your tax, or maximizing your tax efficiency, or minimizing your tax payout to the government on a long term. So it can be a strategic financial plan tool as well for self-employed, but we have to consider what that self-employed person is doing currently and what their history has shown, as well as what their future decisions will be. There's a lot to consider, so please take the time. We provide you free education, and this education is worth a lot of value to yourself and to your clients when making and advising those mortgage decisions. It can help you on both sides. So come down, visit our webinars on a regular. We have webinars almost 2 webinars every month bi-weekly on most cases on Saturday evenings. So it gives you time to sit down and still watch. And we upload these webinars. So even if you are unable to do that on one particular Saturday, you can watch it on the day you are off and still catch up and reach out to us.
They are all thinking. I'm sure they are in the right direction. So I'm sure, each and every one of them is going to be in touch with you. As I said, there is no cost for you guys. Please pick up the phone and speak to Gautam. I have done many things with Gautam, and one thing I'll assure you is Gautam has got a passion for insurance. You sit with him. One time, me and Suman sat with him, I think about 4 or 5 hours. We don't know how the time ran. There is so much information you can learn from him. His brains are full of insurance. So take advantage of his knowledge, take advantage of the, tax implications, take advantage of your health things. This will be a fantastic beginning for you guys.
And once more, thank you, Vince, sir, for all the kind words that you help us with. And I'm here to help everyone, and I'm here to work with your accountants. I can help work with your bill providers, your lawyers to do a proper financial planning. So reach out to me on all matters of financial planning, and I'll help you and help your clients. They want the right advice, they can come to Affinity Insurance Solutions, just like they come to Affinity Mortgage. So thank you guys. Have a wonderful day. We'll close the event for the day. And thank you everyone who showed up, and thank you all the kind words that have come through. I appreciate the time and effort and everybody who has taken the moment to visit us. So thank you.
Thank you, Gautam. Thanks a lot. Great.
Take care.